Hey everybody, this is Brant from Wolf on Wall Street Trade with a market update for the week ending December 13th, 2019, going into the week ahead. So this week, there's actually a lot of stuff going on, but there was only one thing that mattered. So here's the S&P 500 daily chart for the week, and we've got Monday, Tuesday, Wednesday, nothing happening over here. Friday, nothing happening. One big day, Thursday, something happening. So of all the things we had going on, which included the Fed or the FOMC on Wednesday, the ECB, European Central Bank, the Bank of England, the UK vote, tariffs possibly coming up this weekend, which were delayed. The only thing that mattered was the trade deal. So is this the biggest, greatest trade deal that we've ever seen? Is it finally over, this phase one trade deal? That's the question. The bigger question is, what did the market think of it? And it seems like a pretty simple answer right there, but we'll dig down a little bit deeper and you might be surprised. S&P ended the week up 0.7%, Dow up 0.4%. NASDAQ was the best at 1.08% with relative strength, and small caps IWM were the worst, or relative weakness, at 0.3%. So as I said before, nothing happening Monday, Tuesday, Wednesday. I thought we'd get more volatility, down 0.33%, down 0.1%, up 0.33%, and over here 1 basis point. So essentially flat, unchanged, just managed to close green and get that record close title. That's 0.01%. What should be noted about this day, Friday, 0.01%, is that this is the day that we actually knew there was a trade deal, and the market didn't move on that at all. All the movement here was buy the rumor, and the next day after we knew the deal came out, crickets. One thing that was interesting, the last 2 weeks, so coming into this week and coming into this week, VIX had shown a lot of buying on 3C charts. So the last week's video, I talked about this. I thought volatility had more to go. So as we came into Monday and the S&P was only down 0.3%, look what VIX did. Up 16.5% on Monday when the S&P was essentially flat, down 0.3%. And you can see that volatility on this price chart. So down almost 2.7%, a correction, kind of waiting into the week to see what was going to happen. This was the Fed day, nothing happening. And there is when the rumors came out on Thursday. We got a lot of volatility in bonds this week. This is TLT on the daily chart. So you can see it has slightly defensive tone earlier in the week. And then over here just dumped when all these trade deal kind of stories started coming out. And then something interesting happened here on Friday. We'll get to that in a minute. The takeaway is that stocks closed up for the week, bonds closed up for the week, and gold closed up for the week, gaining 1%. So that's a little bit of an odd mix. 2 safe havens and a risk asset group. Here's a 5-minute chart of the S&P 500 on the week. This big trend line is the phase one trade deal trend. So here's Monday, like I said, nothing going on, down 0.3%. This is when VIX just soared. It was a one-way street all day Monday, up 16.5%. Here's that move on Monday in VIX. And remember last weekend's video, buyers were still there coming into this week. So that's 16.5% big. The next couple days, even into the Fed, really nothing happened, even after the Fed. Usually volatility, when it builds up relative strength like this, after an FOMC announcement, it gets dumped almost immediately. So we had a little small move here, but then it really didn't get dumped until Thursday, and then again Friday afternoon. This has everything to do with the trade deal. So here's Wednesday over here. This is the FOMC, the Fed. Really, usually you get a knee-jerk reaction around this up, down craziness. There was really not much happening, but what did happen after the Fed, right here about 2 o'clock, high yield credit started leading the S&P. This was one of the few things that was actually moving. High yield credit has been showing relative weakness for, 6-7 weeks now. And the reason I mention this is that certain assets in high yield credit are often used by institutional traders. Instead of trading the S&P 500 or S&P futures, they'll use high yield credit to kind of ramp things up. So often it will lead the S&P 500, and that's kind of the institutional guys at work, kind of front running something, maybe have some inside knowledge. I dropped this down to a 5-minute chart so we can see some more detail. This is Thursday morning. Okay, this is about 9:35 Thursday morning. Let me show you what this is about. So look at the time over here, 9:35 a.m. Thursday morning. This is what President Trump tweets, getting very close to a big deal with China. They want it, and so do we. That is right here exactly at 9:35 a.m. You can see the time over here, 9:39. That counts these other 4 bars. So that was the start of the big move for this week. This tweet, For the rest of this, I'm going to go to a 1-minute chart right here on Thursday. Okay, so here's Thursday morning's open, kind of sliding a little bit, 9:35. There's the tweet right there, sends the market up right to the bottom of this phase 1 trade deal trend line. Look how just it's respecting this trend line, almost glued to it. Now, there's a reason I'm showing you this on an intraday basis, because when we get towards the end of the video, it'll make sense. This whole move was the Trump tweet. This next move that came out right at 10 o'clock a.m. was a Wall Street Journal article that said they had word from somebody on the inside that the trade deal would be that U.S. would cut all tariffs by up to 50%. And when I say all, I mean on all $360 billion worth of Chinese goods, not some here or some there, all, as well as canceling the December 15th tariffs. After that, the averages faded this, and I want to show you one in particular. NASDAQ gave back all of its gains in the morning. Over here, VIX went green on the day. And guess what? Another story to save the market into the close. This time, it was Bloomberg with an article said, a deal in principle has been made. It's just awaiting President Trump's signature. So this is how we closed on Thursday. Now, for members and anybody else who's listening to this video, I have to tell you, on days like this, there's so much news. I can't even get every little thing that's important, because on a day like this, there were a lot of things that are important. So what I would suggest you do is follow me on Twitter. So days like this, I will retweet news that I see the minute it comes out, or as soon as I see it, that might be relevant. And if I think it's really relevant, I see it moving price or something, I put those in the updates. Otherwise, if there's a lot going on, a lot of contradicting news like we saw this, just follow me on Twitter. I will put the link to that below. So we're back to this daily chart, the S&P 500. This was one of the strongest days I have seen in months. Here's a little excerpt from Thursday's daily wrap after the market closed. Some of the reasons I say that this was one of the strongest days I've seen. So it was about the dollar-yuan pair. The Chinese yuan plunged below the psychological $7. This is like a line in the sand for the trade deal. Treasuries plunged. They gained, yields gained the most in 3 months. Cyclical sectors gained. They led the market. Defensive sectors dropped. Bank stocks, yield curve steepened. High yield credit protection costs fell. The reactions across multiple asset classes were the most convincing since October. That was the daily wrap from Thursday when the market made that big move. So very convincing day. The main thing that moved me the most was what the Chinese yuan and what treasury yields did, because they've been disagreeing with stocks for 6, 7, 8 weeks now. They really moved. They really liked this trade deal idea. Let me show this another way just so you can get a mental picture. Okay, in the candlesticks here, the red and green candlesticks, this is the dollar-yuan pair, but it's inverted. Looking at things from the yuan's perspective, the yuan rallied on this news Thursday. In the white line here is 30-year yields. The yuan is dragging U.S. treasuries around by the nose because it's all about this trade deal the last several months. Bonds sold off, yields moved higher, yields move opposite bonds. They tracked with the yuan. This was what was so convincing about Thursday's move. But what I also said to my members, and I say this a lot, is one day is not a trend. And I've seen a couple of these days where they're just really impressive and strong, and then the next day there's no follow through, nothing. In this case, the next day was Friday, which we actually got whatever details were available, which were scant. So on the next day, that was Friday, crickets. S&P gained 0.01%, 1 basis point. That means the thinnest margin to close green that you could possibly have. 23 cents for a product that is $3,168. Virtually flat, but it gets that record close. So here we are back at a 2-minute chart intraday. This is Thursday over here, and then this is Friday. And I'll show you why this is important. The market opens up on Friday morning. Another tweet. This time it is President Donald Trump over here, which he is saying that the Wall Street Journal, which is what sent stocks soaring on Thursday, was completely wrong about those 50% tariff reductions and called it fake news. Here's the reaction. Essentially, 24 hours had passed. He knew that tweet was out there 24 hours ago. That's this move saying that the tariffs would be reduced by 50%, all $360 billion, had 24 hours, 10 a.m., didn't say anything about it, let the market make a new high, then comes out, says it's fake news. This is what happens. Small caps take back this entire move. So here was the close on Wednesday. Take it all back. And remember, this whole day Friday is the day that the market did nothing. S&P closed up 1 basis point. Before I get to the juicy stuff, let me just show you real quick these trend lines that the market's been sticking to. So here's the October announcement. The phase 1 deal is done. They just have to put it to paper. This is this trend line. So nothing happened. There's no deal. We just keep hearing there's a deal, there's a deal. This trend line is what I call the phase 1 trade deal primary trend. Let's take a look on a shorter term chart. So here it is, this trend. And this is what I was talking about the last couple weeks. Change in character over here, change in trend. We had a lower low right here, still have it. And we had a lower high. So this week on this news, on Thursday in particular, got right back to this trend line and filled this gap, filled it and then a little bit some. Here's the similar trend line for the Dow on this 15-minute chart. Change in character here, change in trend to a lower low over here. This is the correction. This is this week. This is Thursday. It is back testing twice right here and right here. All the time, it had never crossed below until a couple weeks ago right over here. Now it's back testing that trend line, and here is the gap that I thought would be filled in last weekend's video. Let me show you one other interesting reaction. This is soybean futures, okay? So this is a 2-minute chart. This is the Trump tweet and the Wall Street Journal story that tariffs are going to be reduced by 50%. Soybeans love that. Over here, we have Trump's fake news comment about the Wall Street Journal article. And we have some actual details in which the White House released a lot of details. China did a press conference. They basically said, we're going to buy more of everything from everybody, including the U.S. Okay, they didn't commit to any, 40 or 50 billion or anything like that. So soybeans did not like that, and they dropped. And I mention this because the whole deal is about soybeans for reducing tariffs, beans for tariffs. So the point I want to make is Monday, Tuesday, Wednesday, even into the Fed, market's doing nothing but drifting ahead of this whole trade deal. There's Wall Street Journal and Trump. And here is, what Trump said afterward, that it was fake news. So what I've shown you was disappointment in the soybean market. Stocks did not retrace very much of this, a little bit, and then closed up on the day by 1 basis point. There were some interesting reactions on Friday. Here we are back at our chart of the Chinese yuan. Okay, so this is USD CNH inverted. So this is the perspective from the Chinese yuan, and this white line is 30-year yields. So this is the Trump tweet over here on Thursday morning. This is the Wall Street Journal article. Here's the close. Very excited about this, and this is why Thursday was such a strong day in my opinion. Here is Friday. Look what it does. Retraces all of this Wall Street Journal stuff, both bond yields and the yuan. And here's the point I'm getting to. This is the 30-year yield, so you saw the yuan is moving right along with it, or the yields are moving right along with the yuan because it is tracking trade deal expectations, what the market really thinks of this trade deal. And I have changed this white line to S&P futures. Here you can see the big move on Thursday. Here you can see on Friday. The point is, all these other asset classes said, not so interesting as we thought. Stocks, crickets, right? They did nothing. They went flat on the day, closed at a new record high of 1 basis point, 20-something cents. This is why I watch these other asset classes. The bond market and the currency market are far bigger and far more sophisticated than the stock market, and they discount things in real time. You saw the Wall Street Journal article saying 50% tariffs. They discounted it immediately. Stocks did not. So I think there's a little edge there, and this is the kind of thing that we have been seeing for almost 2 months. November 8th is where we really started to see a big divergence between what the yuan and bonds thought and what stocks thought. So here it is again. Had a very strong day Thursday, very convincing. Not so much on Friday. I've got one more little mystery. This is a 15-minute chart of VIX, and this is the big move that we saw 16.5% at the start of the week. Let me show this a little bit closer for the week. Here's that 16.5% move. Here is Tuesday, Wednesday into the Fed or the FOMC. And then, like I said, we came down on Thursday, Friday on these trade news things. What was interesting is that VIX actually held up pretty well. It was green on the week as of Thursday, and then it really kind of dropped into the close on Friday. Part of that, I think, was trying to ramp the major averages to close green on the day, which the S&P and Dow did by 1 basis point. You can see that on VIX's chart here is Friday, so open strong. So while stocks were kind of doing nothing, VIX was really getting slammed, especially the last hour of trade. That helps ensure a green close for the broader market. But the underlying trend of this hedging against downside risk is prominent. Now, granted, we're only one day after the trade deal has been revealed to us, but check out this trend of what is happening here with volatilities or VIX's relative strength compared to the S&P 500. S&P 500 on a daily chart here. This is in the January of 2018. Here's where we are now. And I have shown different variations of this, like the 10-day relative strength. When it builds and spikes like this, we get corrections like we saw here, over here, over here, over here. This 30-day signal is a bigger signal. It's a longer trend. So when we get spikes in this, particularly right above this 0.4 level, this has happened 4 times in about the last 2.5 decades, and they've all corresponded with major market tops. This one here, while the market was ramping up and everybody was saying, oh, the market's never going to stop, and then we came into this sell-off. So you can see it again over here. This is the first time that we've hit a 30-day correlation spike in the entire year, and actually all the way back to this big sell-off when volatility surged on an intraday basis like 450%. My point is this trend of relative strength, and you can see them here too, smaller ones that don't quite go positive that match up with these. You can see it over here. Quite interesting. Here's VVIX, the volatility of VIX, and I've been pointing out this relative strength for a while now, and you can see it continue. Again, it's only one day, but it hasn't even broken this trend line. This is showing professionals have been hedging risk in volatility. That's why we get the relative strength in VIX, in VVIX, which should have been going down to new lows over here. So again, the message is that's one day since we got the trade deal, so we don't know. Maybe they come down more. What shocked me on Friday was this one. What this is the CBOE SKEW Index. I will include a link to CBOE's website, their white paper on skew, so you can understand it a little bit more. It represents perceived tail risk. Tail risk you can think of as a black swan event. So typically it stays in this range of about, when it's down here about 100, it's reflecting very, very low risk, very low tail risk, or at least perceived by investors that everything's going to be fine. And we've pretty much stayed in this range all year 2019. This is as of Tuesday of last week, starts creeping above this range we've seen all year, above this 135 level. This is representing increased tail risk, black swan event. This indicator basically came into being after the crash of 1987, which is tail risk or black swan event when the market crashes like that. This is the highest reading in Skew's history, in the entire history. This is Q3 of 2018. What came right after this? A 20% crash in the S&P as of late 2018 into October to January over here. So this was investors or professionals, institutional managers buying tail risk protection against a downside event in equities about a month or so before it happened. So this creeping up on Tuesday makes sense because as of Tuesday, we didn't know what was going to happen this weekend. If there were going to be new tariffs added, the December 15th tariffs. So they were hedging risk. Now, let me walk this forward a little bit. What I'll do is just zoom in on this a bit. You can see hedging tail risk at the start of the week. That is Friday's close. So after this whole trade deal comes out, after that uncertainty of tariffs this weekend maybe being imposed, we still see investors on Friday scared of some kind of a black swan event. Okay, the trade deal's out. You would think, I would have thought this would have come way down or certainly wouldn't have moved higher. That is the highest reading all year. We have that relative strength in volatility still. VVIX, that trend is still up. It just shocks me that this happened on Friday. So I'm going to leave it at that. Thanks for watching. If you enjoyed the video, you found it informative, please give it a thumbs up. If you have questions, comments, go ahead and leave them in the comments section. I will put a link to the CBOE white paper article. I'll also put a link to Twitter, so even my members, subscribers, I don't want to inundate you with every single headline on a day like Thursday. I will send the important stuff in the updates, and then anything else that happens, you can follow on Twitter, and I will just kind of retweet anything I see that I think is important, and that's open to everybody. Have a fantastic weekend. I will see you on Monday.